What's up, guys? Hey, it's Clint Coons here. And in this episode, what I wanted to do is bring on someone that I've known for many years. He's a client, he's a real estate investor. And I wanted to share with you his story because I see questions from people that are wondering, how do I get started in real estate, what that process is like. And I receive these questions from many of the people that come to my YouTube channel because they know I'm an avid real estate investor, but I also want you to hear it from someone else who's been in the trenches. And Abel Pacheco is that person where he started out and he's built a portfolio now to over 1,500 doors. And there's a process there. And so to have someone like him spend the time to come in here and tell you what you can do to grow your own portfolio or maybe take it to the next level. Maybe you got a few single families right now and you want to get involved in multifamily investing. He's the guy to do it. So with that, Abel, thanks for coming on.
Hey, thank you, Clint. Thanks for having me, man. I'm super excited.
Yeah.
I've learned a ton from you, and over the years, really, your organization's helped me a ton scale and grow. So just to come around full circle and give something back, man, that's awesome. Thanks for having me.
Well, yeah, I mean, it's great because you started out, I'll let you tell your story here in a minute, but you started out investing and now you have, 5 Talents Capital, 5 Talents Podcasts, and you've actually branched out and you're doing more than just real estate investing. But, from what I know and working with you over the last, what's it's been now, 5 years, your business, the real estate was that foundation. And so with that, why don't you share with people, your story, how it all started working for you. Then we'll start talking about some details.
Yeah, thank you. Well, so for those that don't know me or kind of new to our world, we appreciate you, listening. My name is Abel Pacheco. I'm the president and principal of 5 Talents Capital. And so what we do today is we buy apartment buildings and we allow busy professionals, people that don't have a lot of time to do real estate, invest in commercial multifamily real estate via syndications. We basically find deals, underwrite, analyze, put a ton of offers on a bunch of real estate. And then the moment we have a seller that's agreeing to take our price, we go do that deal and we buy it. And we basically put a group of investors together. So a syndicate, a number of us all put our money together and we go buy something bigger than what we would have been able to buy on our own. So that's what I do today. But also we're in about 1,500 doors, as Clint mentioned. We're active investors, general partners, principals, syndicators, co-sponsors. Well, all the terms are kind of synonymous, but we go actively do that, and we buy heavily in San Antonio, Texas, South Texas, a lot of properties here. So that 1,500 doors is about 15 multifamily properties. The smallest properties are like 45, 50 doors, and the biggest are 260 something. So 268 unit properties, and somewhere in between there. The way we got started was definitely not like this. We were a single family investor. So kind of to Clint's point, right? It was, man, I've known him for a number of years, but before I connected with him, I was one single family house at a time. So myself and my wife were in tech. We worked a W-2 normal, job, and I was a sales guy for many of my years, just on the phone. And from 2006 to 2016, we worked at a company here locally in San Antonio, and it went from a couple hundred employees, 600 I think when I started, to about 6,000. And it was a $200, $100 million company a year. And I exited when it was about a $2 billion corporation. So that run, when I was working at tech, my goal was save as much money as I could, save every penny and every dollar, live below my means, save up 15 or 20 grand and buy another house. And that was really my game plan. So it took me about 10 years. We bought 8 houses and single family houses. And, for those that don't have any money, I'm with you. I was there. I think I bought my first house with an FHA loan, 3% down. I think we put $5,000 on a Texas house. We lived in it. Then we stayed in there and we went to the next one. Instead of selling the first one, we bought the second, did another loan where we lived in it, put a 5% down, and then rented out the first one. And then we proceeded to do that deal number 3, deal number 4. It took me a long time to do that. It was between my first house and my second house. It may have been like 4 years, 3 or 4 years before I could save up enough money to go buy the second. But when that happened, we started getting cash flow. It's basically cash flow positive. The mortgage was, I don't know, $600 or $700 at that time, and I was renting it out for $900 or $1,000. So a few $100 extra cash flow, I would make it there. And I always had side hustles. So don't overlook the amount of time that you have. I was a single individual at first. When me and my wife were married, we had a lot of free time. There was no kids at the house. So Monday through Friday, afternoons and evenings and weekends, I would find properties. I would look for deals. And then I would also make a lot of money on Craigslist. We must have hustled about 15 to 20 cars, somewhere in that 10 to 15 range. And we would look for a car and go buy it and then go sell it on Craigslist and make a few extra grand. And that's what helped us buy our third or fourth house. It didn't start at cars. We sold golf clubs and furniture and watches and literally anything we could find on Craigslist that was worth of some kind of value. Call them, ask them to buy it, and then go sell it again for some more money. And that's what we did for, the first 4 or 5 years. I was making 50 grand, I think, in tech when I first started, 60K. I worked out my way from 2016 to 2019-ish. I think when we left in 2016 Rackspace, I was just crossing this $200,000 a year barrier, but that W-2 wasn't like that. For 7 of those years, 6 or 7, I was making less than 100 grand, for a good number of those years, and finally broke through, finally made more. We had more money to invest. I invested in more real estate, but essentially it was the grind of doing another deal and another deal and another deal before we got education. I'll pause after the education part to give Clint maybe some time and take a breath, but we bought those houses. All that time I thought I was doing it the right way. I was the individual in my group that, my network, my circle, that had 8 houses. No one else had that many houses. So people would ask me for insight and education. I would tell them what I knew, but I wasn't getting education from anywhere until I finally, ponied up and I got drugged to a real estate conference, a seminar, free weekend real estate, and my sister brought me with her. And after that weekend, I was putting $20,000 down and buying education and, real estate education. And from that moment, I was like, okay, I went from buying 8 houses in 10 years to we did 10 deals in 1 year, single family, applying that education before I entered into apartment investing or multifamily door. So anyways, let me pause here. That's kind of how we got started in a quick summary, Clint.
So it sounds like then what you were doing initially is you would buy a house and you're using the BRRRR method. And after you acquire that, you'd live in it and then you would move out, turn that into a rental, and you kept that rolling. So I would assume, you're finding the properties maybe on the MLS initially. And then after you educate yourself on different ways of investing, because that's where we met at an event years ago, you then you tapped into 10 properties in 1 year. Well, for someone who's sitting back going, well, how the heck are you gonna? I get the BRRRR method, but how are you gonna find 10 properties in 1 year? What does that take? Mental shifting, processes and things like that to do that.
Yeah, well, let's write down those two. I think those 2 things are great points, right? 1, mental, and 2, maybe tactical. So for somebody that wants to employ some of this immediately, right? What I was doing was going through agency loans. I was buying off the MLS. I was searching like a dog from the real estate listings and going to open houses and all that stuff and trying to find a good deal. Well, that was barely scratching the surface because I wasn't heavy in a lot of rehab. If you talk to my wife, she'll tell you, I don't know how to do plumbing. I don't know how to fix floors. I just don't do that very well. Not well anyways. And so we would find houses that were already ready to rent, and we would do that and make a little bit of cash flow. But the education point for me, there was these terms, and if you're listening now, you can write down wholesaling, you can write down seller finance, you can write down hard money loans, you can write down motivated sellers. These terms that you can go search on your own, they're free. There's a ton of YouTube education on how to do it. I started looking for motivated sellers that were willing to sell their house at a discount, and I would lock those deals up under contract. So tactically, I had a contract. I would agree to a price, get them to sign their the rights to sell it, and I would be the buyer at a certain price. And if I liked that deal, then I would go do that deal. I would use a hard money loan, a hard money lender, which I'd never used before. I thought the hard money lender was like, just by definition, I thought he was going to rough me up if I didn't pay him or something like that. Hard money, I was like, oh man, that sounds aggressive. But I realized, there's people that will lend the price of the value of the house, the appraisal value plus your rehab cost, and do like 90% of everything that's needed. And as opposed to what I was doing, it was easier to qualify for more of those loans. They wanted a little bit of experience, which I had some up until that point, but they wanted rehab experience, construction experience. And so I just put a partner, me and a partner that had already construction experience. We did a deal together, and that's how we punched our card with multiple times of construction experience. And then we used my W-2 liquidity and my credit score and that kind of thing to get a loan. And we did, a bunch of houses in 1 year. So it was because I paid for education that I even found those terms. So there's a $20,000 education right there. Go Google those terms and find all those terms on YouTube, and you'll figure out a lot of the information on how to do it if you've never heard those. But yeah, I invested for 10 years without knowing you could do that. And so that's how we did 10 deals. We did some seller finance the other way, where we got into a couple properties with little to no money down. It was creative financing, so we learned that. They were willing to trade a deal to us, take over the payments, and pay them a higher price. And then we wrapped it up under a contract, put together a note. That I guess what Clint knows more than I do on how to do. I just talk to the pros. I'm like, how do I do this? And they put it together for us, and we wrap it. And then this deal, we ended up selling it at a higher value than what we quote unquote bought it for, had it under contract. And it was like, this has unlocked these potential different ways to buy houses where I needed less money, how to say yes more. And that's tactically what we did. Another thing that we did was, for anybody that really wants to get cooking, we put an ad on Craigslist, and we said, hey, because I love Craigslist. So I was like, hey, I'm willing to buy your windshield space if you're a taker. And we had white vinyl signs, stickers, put on the back of somebody's windshield that says, I buy houses, with a phone number that came to my phone, not theirs. And I told them if I buy any deals, if we do any deals, I'll pay them $1,000 for riding around with the sticker. So I didn't pay them to do it, to put the sticker on. I paid for the sticker. They did that. We had about 400 cars rolling around with our sign and our number. So we did that for, those 10 transactions. That's how we found so many. We found a deal for $20K. They were ready to sell. It was a bad, ugly house, and we put 30, 40K into it, and we sold it for like 130K. And it was the very first deal I found off of that to kind of paid for my year in advance. So that investment to actually do that, actually to get my first, piece of paper contract, was one of the hardest things ever mentally, because ultimately I realized how hard it was to kind of say, I'm going to go do this, and I'm going to pay this price for this particular house, and put it in writing. I was just fearful. I was scared. I was nervous. We finally mustered this is the mindset thing. I realized, other people do this like 50 times, 100 times in a year. What's the first one? Big deal. If something doesn't happen, I don't close. No big deal. You haven't put anything down. That was a big part of it. And so, that's a little bit how I got started.
Okay, so what you just said about that, there's 2 points in there that I think is really important for the people that are watching this right now. Number one, you said that you teamed up with someone who knows more than you. And that's really important when you get started. You don't have to know it all. There's a lot of people out there that have the knowledge and they're willing to help someone like yourself. And of course, they're going to be in for part of the profit. So you do the heavy lifting, but then when it comes time to getting the loans, you're bringing in their expertise that many of those lenders require. So in that scenario, how do you find those people?
Yeah. Man, the biggest, factor of success that I've had for me is networking. What I did then kind of unlocked this mindset for me that said, oh, you don't have to do everything yourself. You don't have to know everything. You just have to partner with people that are experts. And the networking part, I had heard this term for years, your network is your net worth. And I thought I understood it, but I really realized I didn't, because I wasn't leveraging the way that I do today. And that is just, number one, you're shaking hands, getting over a little fear of saying hello. That's the first one. And most people, they just, for whatever reason, there's a lot of people that have this fear about talking to somebody because they've done something, they've done these great things. You just got to get over it. You got to get over yourself and humble yourself a little bit. Even if you think you're a pro, which I thought I was a pro in my network. I did 8 houses. No one had done that. Well, just to go to somebody in a room that says, I've done 50 houses, or I bought an apartment complex, to humble yourself and just say, you know what, I don't know everything. I'd love to learn more. Can I take you to lunch? I don't like the term pick your brain anymore. I think everyone says that, but it's just, I'd love to learn a little bit more. What you did was fascinating, was inspiring. I'm motivated. I want to go do it. Tell your truth, tell your motivation. For me, it was I have a 4-year-old and a 2-year-old. And at the time it was, my wife's pregnant. I'm trying to get this thing on, and I see you doing it. I'd love to learn how you did it. So any advice, any insight, if they say no to that, okay, well, ask the next person. Ask the next person doing the things that you want to do yourself. And in truth, that little bit of, spark to say, okay, we did 10 houses. Well, I met somebody else through our networking and our education and conferences and meetups and all the places that I would try to go to. Is I met another person that was doing apartment complexes, and I said, "Wow, you bought a $20 million building. I wouldn't even fathom. It's going to be 20 more years before." And they go, "No. You don't need $20 million. You just need a partner with a team that can qualify." And then we put the deals together. And so I'm literally invested as a general partner principal in $100+ million worth of real estate. And had I not partnered with somebody, I would not have been able to do any of those. Our first deal was 124 units. It was $7 million. For those that don't, there's like a little mystical part of it here. It's, I don't know how to buy this deal. The networking part was, I met someone else that was doing it. I knew them. I liked them enough. I trusted them. I asked them how they did it. They showed me how. You just, group a few people to sign on the loan, just like a co-signer, almost, if you would, for a car. Co-signer for an apartment complex. And this is how we put the deals together. And, that networking part of it was shaking hands, meeting people, going out of my way to say, I don't know how to do this. Humble yourself and just, then continue a relationship, right? How can you serve another person, provide them value, give them some insight or nuggets, anything you can do to help somebody else. And a lot of times people want to help you as well, especially successful people. For whatever reason, it's like, man, I've already achieved it. You're going to go apply this? Let me help you, give you some of that knowledge. It's amazing. So
yeah, and it's about building processes as well. And you said those connections. So when you were talking about buying the property with a hard money loan, buying residential real estate with hard money, people would think that's just stupid. Why would you ever agree to pay someone 10%, 3 or up to 5 points, depending, to get into that deal? Well, as you've done, I did it. My first real estate that I got involved with, I was using hard money lenders. I was paying that. They were loaning 100% of the rehab value, because they knew that the person that I was using to do the rehab did quality work and that the value was going to be there after their work was done. So I would come in, get my properties. I'd be into it for maybe $1,500. And then I would go to I'd already had a community lender set up that I'd created a bank account with, I created a relationship with. I explained to them what I was doing. And I said, what are the terms under which you'll loan me money? And they told me, listen, you got to have 30% equity in the property. As long as it appraises, you have 30% equity. We will give you 70%. To take out the hard money lender. And so that's what I started doing, just like what you were doing. And so for people who are investing in real estate, it's understanding that there are ways. You don't have to have a ton of money. You don't have to have money to do this. But if you find someone with experience, there's ways to get into it. You just have to build that group that can work with you.
Yeah. Yeah.
So you said that when you were building that out, okay, and you find these people, it's through networking, from going to different conferences. And because you see conferences all over the place, or virtual now, which you weren't going to virtual then, you're going to in person, correct?
Yeah, it's just before COVID. So we were doing a lot of travel. We were taking advantage of everything local that we could in San Antonio. If you go to meetup.com, you and search for single family, multifamily, whatever, kind of investing you're interested, or whatever group, you can find some people that meet up at a certain time. So there's a tactical nugget, right, for you, meetup.com. And that's really good. And then there's Facebook groups that are the virtual. There was, I was not heavily into them then. I am a little bit more now, but and then I'd ask again my network too, like, hey, which events are you going to? When I was at the event, I would ask, which events are you headed to, and which one do you think is most valuable? And that you have to be willing to invest in yourself, time and resources to get this right, and then be ready to implement. And one of the things my wife tells me, she's like, man, we did it right, because she was pregnant with our little one, and I was worried about traveling that year. This is our first one. And she goes, well, it's better to go now while I'm pregnant, because when the kids are here, you're going to do less travel, and I know it. And so for a year, while I was working a W-2 Monday through Friday, I would take off early Friday or leave on Thursday and kind of fly to the event Friday, be there Saturday, Sunday, drive, come back and be at work. And we went to, 10, 12 different cities over a year to a bunch of different conferences. And that is a big investment, time, effort, energy, resources. But it just unlocked this, new avenue of investing for us. And, it was amazing. Commercial real estate absolutely changed it up for us, because we learned and because we went.
Yeah. So we always talk about our successes. What would you say was your biggest failure along the way, or maybe there's more than one, and then how did you overcome it?
Yeah. Well, I would say, for the 10 years, this is kind of funny, because I think back on what was it that held me back? What was it? And I was worried about the cost. I didn't think I could qualify. I didn't think I was good enough. I didn't think I was like the quote unquote wealthy. They made certain moves and I can't make those. I came from a family where my parents are in their 70s, and they're still working today. And I'm like, man, this is where we came from, and this is our family, and I don't know if I could break out of that. I read this book with Rich Dad Poor Dad. I'm sure a lot of your listeners have read it. I read that in 2006-ish, whatever. Well, a couple of years later, I read another book that was called The ABCs of Real Estate Investing. It was a Rich Dad Poor Dad advisor's book by Ken McElroy, and he talks about buying apartment complexes. Well, I bought this book, and I was like, ABCs of Real Estate Investing. I thought they were going to show me how to buy my first single-family house. Ken McElroy ends up talking about buying apartment buildings. In fact, he's explaining what I'm doing today, 2022. But for those 14 years, or how, from then till 2018, 10 years, I had this limiting belief about myself that I was actually good enough, or I could do that. And so that's why I played small. So my biggest, just kind of mistake over there was just belief in myself that I could go do that. So anybody that's listening, man, if you have a little bit of motivation, you have a little bit of spark to you, have a little bit of, mindset to go after it and go do it, like go do it. You absolutely can make it happen.
Yeah. I mean, what you hit on is the mindset that It's
Yeah.
available and you can do it, but you have to break through that. And so many people, I think, hold themselves back. They find reasons not to do something. They're always looking for the excuses to say no rather than say yes. When an opportunity comes along, it's presented to them, they ask, well, how much is that going to cost? And so their mind automatically goes to preservation. We got to figure this out rather than saying, what is that going to do for me? And that's where I see a lot of investors, even business owners that I've run into, it's making that switch to looking at opportunities and then seizing those opportunities. It's what I've talked about this before. You wonder, well, how do you create luck? It's where planning meets opportunity. And then when that opportunity is there and you've planned for it, you better be ready to take action and be willing to move forwards. And that's the way it is with real estate. My father was an avid real estate investor, and to this day, he talks about all the deals he messed up on, or he could have had, should have had, done this. And the reason why is that he couldn't say yes right away when the opportunity was presented. And that's a problem. So you started out, then you got these single family properties. Mm-hmm. Then you make this switch into multifamily. That's a huge leap to go from single family to multifamily. So did you do it with your own money, or did you actually just go out there and syndicate right away?
The way we moved from multifamily, or the way we moved to it, was really, it was the same principles that we took in single family, which is partner with somebody who had more experience, had more knowledge. And the demystifying part that I talked about was just the line of sight to debt and equity. And the moment you have line of sight to debt and equity, then you have the ability to go do that bigger deal. So in multifamily, it's really a matter of net worth equating to the size of the loan amount, equity enough to buy the deal. The general partners need to have a percentage invested of their own money into the deal. And then you have to have somebody with experience, somebody that's done it before. So it ends up being a bigger team than just maybe me and my single family house was me and a contractor. It's 4 or 5 of us that are all putting our resources together, net worth, liquidity, ability to raise capital, and then our knowledge on actually finding the right deal and going to implement and execute it. And that's what we did, was we leveraged each other and our experiences, our knowledge, our resources, our, what we had, our network, to go say how to bring together 30 or 40 investors in one group and all march down the field in unison and have score a touchdown at the end and buy the $10 million building. And that's what we do. And that's how we've done it, the past 14, 15 times now in the last several years. And that's a big, it was a big mindset, the same mindset shift to say, I don't know if I can do the hard money loan, was the same mindset shift for me to say, I don't know if I could sign on a $7 million loan. Was crazy for me the first time. Then the second one was 9, and the next one was 10, and the biggest one was, it was like $26 million. And it starts to be okay after you've done it a number of times. And then you realize, there's a lot of people that do this because the lenders give that money non-recourse debt a lot of times because these assets are so valuable. They generate income, they provide a good stable cash flow, they're good at scale, and they give us all the tax benefits that we want as investors and secure the asset over there for the banks and the lenders. So it was the same thing, different, but the same. And that's what we did, and that's how we're doing it today.
Yeah, that's a mistake that I think a lot of people make, is they think that multifamily is different from single family. It's just real estate with more zeros is all it is. Mm-hmm. And so you're going to go through the same process. But in reality, when you're going through the multifamily process and you're borrowing money, you don't have to give a personal guarantee many times. Mm-mm. And so the term you use, so people understand this, non-recourse means that if you had to walk away, something happened on the property, and the bank comes in and forecloses, if they sell it for less than what is owed, you're not liable for the difference. So this is important to know when it comes to putting these deals together. You don't have a lot of risk. Mm-hmm. But what you said, which I hope people understand here with that is that when you're doing these deals, you gotta have the right financing in place, and you gotta have someone who is experienced to begin with, right? That's a key to getting these types of loans and putting the deals together.
Yeah, absolutely. The I think you know
Yeah.
you summarized it. You summarized it absolutely well. Experience, partnering, leveraging. The banks love the non-recourse debt, and less risk, less risk.
Where do you find the deals? That's what everyone wants to
So
know.
hey, where do you find them? So the 15 deals we've done. There's probably been about half of them that are quote unquote off market, and half of them that are on market. And in commercial real estate, what happens is almost everything, it feels like 90% of all the deals actually trade through brokers. So when I was a single family investor, I wanted to say, oh, I'm going to find the deal myself. I'm going to go straight to the owner. And so we still do that. We still have some calls that are going out and letters that go out to apartment owners. And we've closed probably 3 of them that have been direct to seller. Those, though, are really the needle in the haystack. If you want a repeatable business, you actually work with the brokers, and the brokers will term them as off market, even though they go through the brokerage. Seller calls JLL, calls Northmar, calls the big guys and CBRE or whatever, and they'll go say, hey, I want to sell my apartment complex. The broker then goes, okay, they do the OM, they do the data, they make it all pretty nice and packaged, big firm, and they'll send it out to their list of off-market investors, somebody like myself that would say, hey, I buy deals, and they'll send it to, I don't know, who depends on every deal, 10, 20, 100, who knows. It goes to this off-market, which really on-market-ish in our relative terms. But before they distribute it on their website, someone gets a first look. And that first look is we want to be in that first look. And in this space, it's really hard to break in because if you've never done a deal, they don't want to send you that off-market property. They don't want to send you that first look. They just want surety of close to make sure they can absolutely close a deal. They don't send them to newbies or this is my first time. So what we did was again, back to this network thing, we partnered with other people that had a great track record, have been doing a lot of deals in our market, in our area, and we leveraged and we played the we game. We are buying a deal. We are looking for a property, me and my partners. And they're like, who's your partner? Oh, okay, I know those guys. I've sold them and bought and sold a couple deals. Yeah, well, let's work together. And so now as a team, we get some of those off-market looks, which is what we want to do for the commercial real estate broker. Any brokers listening, call me. I'm buying in San Antonio, South Texas. But then also there's on-market deals. And, half of our deals have been on market from their website. Go in, there's financials. There are T12 rent rolls. You sign an NDA, look at their website, go do the analysis. The analysis is what a lot of people don't do a lot of. People will say all the time, there's no good deals in my market. Oh, you're in Texas? Well, then you got a great market. It's so easy to find deals. I'm over here in, XYZ market and so competitive or whatever it is. Really, man, sometimes we underwrite and analyze, 50, 60, 70, 100 deals, underwrite them all the way through, walk half of them, put offers on a third of them, get rejected on 29 of them until the one says yes. And that is not an easy thing, but it is repeatable and it's systematic. And we just go and underwrite a ton of deals on or off market, broker, not broker, direct to seller, whatever, and just go look at a bunch of them and then, make offers. And that's the work part, the tactical action that a lot of people don't want to take, which is why some people, when they close deals, are like, oh yeah, I understand it's hard to find a deal, but you just kind of keep pushing through until you find your deal, because you're eventually going to find one. It's a numbers game. And then when you do, you've got all the resources lined up to go take it down. So that's there. Unfortunately, there's no magic bullet in that, but that's how we're doing deals today.
You just can't be afraid of rejection. If you can't handle rejection, then you're not going to be able to buy real estate because no one.
You've got it.
I mean, you're going to get a lot of no's. They're not going to accept your offer. If you get a lot of yeses, you're making the wrong offers. So, in finding deals too, one of the things that I discovered is that when we went into a certain market, we were working with the local, we found this used appliance store. And so a lot of, investors that own properties, they'll go to the used appliance store when the refrigerator goes out or the
Nice.
stove.
Yeah.
So I started talking to that individual and said, well, who are the players in the market? Can you introduce me to some of them? And so we started making connections that way. And then we started working with a property manager. And then the property manager, because he really knows who's in the market. And we let the property manager know, hey, if there are individual investors in this market that you know of, that you manage their property, and typically they're out of state many times, we're interested in buying if they want to sell. And so we had deal flow that started coming in from the used appliance store, from local investors who were looking to retire and sell their portfolios. And so as you stayed off market, and from our property manager. And that really helped as well. And so finding places like that, you don't think about it when you're driving down the street, you see that used appliance store, but that could be a gold mine for you, an opportunity to get those off-market deals.
You triggered one of the reminders here. So some of our team members are members of the National Apartment Association or other apartment association groups, and they end up meeting once a month and hanging out, and it's a lot of property owners that we're building relationships for the long term. So I kind of forget about the work that my team does, because it's not just me, but they spend a lot of time in there, and that's how they've done some of the property direct to seller, as well as the good old letter. Hey, we're going to buy X amount of doors this year. Want to see if we want to buy yours. So anyways, that's awesome. Thanks, Clint.
So with your business now, all right, so you market it up. So you're not coming up with all the cash for the down. You've actually started syndicating, and which means you're raising money from people that you have a relationship with, that you've met over the years. That's why that networking is so important.
Yes.
So in order for someone that is looking at that's watching this right now, and they've been through the single families and they've got their portfolio now, they want to take it that next level. What are some of the key takeaways that they should know of if to do that?
Yeah. Well, the two biggest areas of impact that are going to drive the most success in what we do today, it's finding the next deal and finding investors to go buy the deal. That's the 80-20. How do I go underwrite a bunch of deals that can lead me to the one great investment? And how do I make sure I have enough money to go do that deal when I find it? So finding new investors and finding new deals, it is a lot of the same group that we're looking for, like networking into the right areas, networking, shaking hands, building really good, strong relationships with investors. And a lot of times what happens, is you have somebody that has some net worth, that has some liquidity, that has, the means to go do this, but they don't want to do any of the work. They don't want to go underwrite 100 deals and walk 60, 70 properties. So they'll leverage somebody like me that's willing to go do that work. So if that's you're willing to go do that work, then you may be a deal finder. On the flip side, some people, are not real estate folks. They're more, they like to talk, they like to socialize, they like to, shake hands. And so you may end up networking a lot for raising capital. Those are the two biggest areas that I see. There's a lot of things in between. If you're a good project manager, if you're a good, you can handle a Gantt chart, and you can handle contractors, and you can do construction management, and you like asset management. There's a lot of in-between stuff that's very valuable. It's needed. But at the end, can you find a deal or find some investors to get there? So when we raise capital today, we're basically following, you got to get some education also to do it the right way.
Yep.
You are following SEC, Securities and Exchange Commission. We use exemptions called Regulation D, 506B or 506C exemptions. So just learning about that stuff, it'll teach you about accredited and non-accredited investors and how to properly qualify somebody that's can even come into the deal the right way, the legal way, And then once you do that, you're really just, shaking a lot of hands and trying to meet the next person and talk to people. Man, it's the biggest one. I mean, I talk to a lot of people. It's hard for me not to be excited about real estate investing. So when I go somewhere, I try not to it just oozes out of me. Oh, I'm a real estate investor. You should do this. The best thing since sliced bread. I try to let someone else ask me, what do you do first before I mention anything about what I do? So that's a disclaimer there for me. I'm like, what do you do? How do you do it? And I'm like trying to hold it back. But as soon as they say, what do you do? Oh man, I'm a real estate investor and this is what I do. People ask a lot of questions the moment you start telling them that. And, you just end up being in a conversation. And then funny as it seems, a lot of this, we are all over social. We are all over the internet. We are all over. We have a podcast, Five Talents podcast. We drive a lot of education. We have 200 shows that we've done specifically around commercial multifamily investing. So when you give and give and give and give education, knowledge, probably Clint knows this, the law of reciprocity. He gives and gives and gives and gives. He goes all those Saturday events for 6 hours of his time and pushing out, education for free. A lot comes back to you. And so I would say whatever you learn, put it back out there. Internet scales well. The internet, video, blogs, posts, whatever, you'll have people that naturally gravitate back to you that say, hey, I was interested in what you were talking about. How do I learn more? And those are a lot of our investors today from the internet, frankly.
Wow. Well, you mentioned stuff. We're running out of time here, and you mentioned that you have a podcast. So if somebody wants to go to your podcast or your website, how would they reach it?
Yeah, go to 5talents.capital. So our website's www.5talents.capital, and it has links to our podcast. On our show, we're going to get Clint out there too, which we just recorded an amazing show. And then if you're on Apple or FM radio or Slack or Google Play, where all the places where the podcasts are, it's the 5 Talents podcast. Build wealth like the 1%. So we're excited. We'd love to have you come learn and get into our world as well.
Great. And I'll put that in the show links. Abel, hey, thanks for coming on. I know that there's a lot of nuggets in here that people are going to be able to take away. I mean, what you're talking about with the cars, I was like, wow, I've never heard that one before. That's a pretty cool one. So I appreciate you taking the time. I know you're in the middle of a move and your wife's probably really upset with you because you're like, oh, I got to go hang out with Clint and I can't help you pack. Been there, done that. Yeah.
It's awesome.
So, all right.
Yeah. Well, thank you. Thank you very much. I'm humbled. I'm appreciative that I get to hang out with you for a little while. And man, you've given me and my family a bunch of opportunities. Whether you know it or not, you've helped a bunch and want to say thank you. So anybody following Clint, you need to get into his community, you need to get into his system, learn all the things you can, join up. He's the man. So thank you very much.
Thanks, Abel. Take care.